fear is based on the unknown. And so if you're communicating properly and you're telling them the variables and explaining the process, then most of the times that's going to alleviate a lot of the fear.
What's up, everybody? Welcome back to Design, Build, Sell. We're your host, RB Gallup,
Sarah Bennett,
and Alicia Dobby.
And we are super excited today because we have joining us local loan hero, also known as a lender, David Cain with Resource Financial. So welcome, David.
Awesome. Thank you so much for having me.
Absolutely.
Super excited.
Yeah. So we'll kind of get the ball rolling, let you just introduce yourself, tell us about yourself, where you're from, family, and what got you into the lending business.
Awesome. Well, my name is David Cain. I'm with Resource Financial. I've been in the loan business for 24 years now. Pretty crazy to even say that number. It means I'm getting old. But I am married, 3 kids. Sarah's my wife, not this Sarah. But
Another Sarah. Let's not confuse the people.
No, different Sarah, absolutely. And 3 kids, 17, 7, and 4. So very busy, lots of drama on all ends.
Yeah.
You got a nice spread there.
Yes, absolutely. So I'm originally from Aiken, South Carolina, and I've been in Columbia, though, most of my life. I kind of fell into the mortgage business. I was a sports agent coming out of college. Yes, the local Jerry Maguire. And so I had some buddies that were in the mortgage business. I came back to Columbia from Raleigh, started my own sports agency, and the sales cycle in the agent business is typically about a year. So very, very long time. And so my buddies were in the mortgage business and say, hey, why don't you come earn some extra money while you're building your business? And I said, yes, sounds like a good idea. I need some money right now. So that's how I started. And eventually the mortgage business overtook the sports agent business.
Mm-hmm.
So,
how long have you been with Resource Financial? Because are they a local company?
Yes. Resource is a local, privately owned mortgage banking company. I've been with Resource since 2018, so a little over 4 years now. And we're headquartered right here in Columbia, but we have offices in 4 states, and we're licensed in 12. Mm-hmm.
What types of loans do y'all handle?
So we kind of handle every type of loan pretty much that exists from a standard lending perspective. We do everything from state housing, FHA, conventional, VA, USDA, jumbo. We're doing construction loans now, bridge loans. So lots of different options for people.
Mm-hmm.
What's a bridge loan?
So a bridge loan is essentially when you have a house maybe that has a tremendous amount of equity in it, and you want to buy before you sell that house. So you're able to tap into that equity to use it as a down payment for the new house. And then once you kind of sell your house, then you pay off the bridge loan.
Okay, so and then do you convert that to or do you just get another mortgage if you need that at that point, or how does that work?
Well, it's actually a second loan.
Okay, so you have it's part of the mortgage of the new house you're buying?
Correct.
Oh, okay. Neat.
Mm-hmm.
That's cool.
Yeah, so it gives people more options, especially in this market, since we've had lots of appreciation over the last few years. You can tap into that equity, but yet at the same time, you don't have to sell your house before buying a new one.
Mm-hmm.
So
That's appealing.
That is.
Oh, yeah. Mm-hmm. Absolutely. Makes it a little bit easier. You don't have to kind of hurry up and time the sale and the purchase at the same time. So it's just a huge convenience.
Mm-hmm.
Wow.
That's cool. I guess I didn't even know about a bridge loan.
Now you do. Thanks to our local loan hero.
Loan hero. Here you go.
So obviously RB and I deal with clients that would mostly have a construction loan. Is there any advantages to doing a construction loan versus someone waiting to then purchase the home with like a conventional loan at the end?
Well, I would say probably the advantage is you're able to do a long-term lock. So in this market, rates have kind of been increasing over the last several months. So with a construction loan, it would give them the option to lock in pretty close to the market rate versus at the very end, if the home takes 8 months to build, then you don't know really where the market's going to be at that time.
So I do get a lot of clients when a lot of buyers that when I meet with them, they might talk about building a home. They're like, we don't know if we want to build a home, if we want to just buy a house. Obviously, the timing is a big thing for people who want to build a home. But I don't think that a lot of people really understand the construction loan process. So can you give us maybe just like a very brief rundown of what someone should expect if they want to look into a construction loan?
Yeah, absolutely. So there are two different types of construction loans generally. So there is a one-time close, which essentially they're closing up front, and that is their permanent loan, versus a two-time construction loan where they will close up front, do their draws, get the money to fund the construction of the home as it's being complete, and then once the home is complete, it kind of transitions into a permanent loan at that time. So there's actually two closings for that.
And it's pretty, I don't know if tedious is the word, but in terms of, in my own experience, when you talk about these draws at the builder request, don't they have to send out inspectors and all of that to kind of check off and make sure that it kind of holds the builder accountable? Is that what the point is of the inspections or whatever?
Yeah, so the bank doesn't want to get too far out in front of the construction of the house. So there's different benchmarks for completion of the home, and at those benchmarks, typically there's 4 or 5. Then there's an inspection. Once the inspection is done, they verify the work's complete, then the draw's sent to the builder.
Yeah, we love working with construction loans. It's super easy, and it kind of it's nice to have a third party, someone to be kind of impartial and say, yes, this work's been done, this is the payment. And I think it helps the builder and the consumer. There's someone else verifying and assuring that this is what's complete, and we're funding only what's been completed in your home. So we like it, and the banks have gotten pretty efficient with it. Vicky in our office handles it, and she can take our information and process it. I don't even know when draws are scheduled or coming in a lot of times now. Right. She's on top of it, and we know all the banks. Like once you get a good relationship with a lender like yourself, and then the construction teams y'all have, it's pretty fluid.
And it's really not that much extra effort for the borrower or the client, because they're not really involved in that process. It's really more the bank and the builder. So it's not an inconvenience for the consumer.
Why would how would they determine if they're going to do a one-time close or a two-time close for a construction loan? Is there a difference of why they would choose one versus the other?
Well, I think one is the lender that you're going with. Some only offer the one-time close, and some only do two-time. Also, you can look at, if it's a two-time close, you can use the appraised value, which can help benefit the client. If it takes 6 or more months to build, then they're able to go off the appraised value at the end.
Right.
So that's a huge benefit for the client.
We had talked before we started, we were talking about the whole float down thing, because I've heard some builders mention this term float down.
Right.
What is that?
So great question. A float down is, especially on a one-time close, you're going to have a rate that you start with. And then when you're within 60 to 90 days of completion, the buyer or the borrower has the option to see kind of where rates are. And if rates have dropped, they get the benefit of the lower rate during that time period. So it helps them kind of get closest to the market rate as possible.
In a builder group of mine, they were talking about buying down rates. So the builders were offering as an incentive, these are spec builders or people building homes to sell, talking about buying down a rate. How does that work?
So there's always a cost with buying down the rate. So if the seller or the builder is willing to participate in helping the buyer basically achieve a lower rate, then they can pay the cost to get a lower rate. Now, one other thing that's actually, I think, more beneficial right now in this market is what we call a 2-1 buy down. So a 2-1 buy down gives the client the option to have a rate that's 2% below the current market rate for 1 year. And then the second year, it's 1% below the market rate. And then the third year through the 30th year, it's that market rate that, when they locked in the loan.
That's pretty cool.
Yeah, especially with the climate we're in.
Yeah.
Rates are super.
Always refinance.
Yeah, exactly. And they will be going down in the future.
Yeah.
Yeah. We hope, right?
Yeah.
We're going to ask you about that. So
Yes.
Yeah.
let's see what's in your crystal ball. Well, I guess we could just kind of talk about that. What do you think? This current market's been so interesting, and it seems very, very fluid, and it seems to change. Like buyer's confidence, I thought when we record this about once a month. And when we recorded, I think last month or so, buyer's confidence seemed pretty low. And now it seems to have come back a little bit, which is crazy to say on like a 2-month period, maybe looking at the last 2 months to now. But what do you see on the horizon?
Yeah, that's a great question. I wish I did have the crystal ball, but I don't. But kind of looking at trends and what's happened over the last few months and last couple of years, rates have been escalating very quickly here the last couple of months especially. And I think anybody that does not have their head in the sand believes that we are in some type of recession or headed towards one at some point in the near future. And what I tell my clients is that after every recession in the history of the United States, there has been a rate drop. So the rate that they're getting now is not necessarily one they're going to be holding for 30 years. They're more than likely going to be holding it for 2 or 3 years. And so everybody's been super comfortable with the rates in the 2s and 3s, and they see 5s and 6s, and that kind of freaks them out. But what I tell them is, look, this isn't really a 30-year mortgage. This is more like a 2 or 3 year mortgage. So I believe they're coming down. It's just a matter of when. And we'll be a little bit closer to something that's more normal the last few years.
And even like getting back to the whole, like right now, people being used to the 2 and 3%, that's been very, very rare overall when you look at like the history of mortgages, right? Really 5-6% isn't that high. And I think that when you are able to like kind of lay that out of what mortgages have been like over the past, interest rates have been like over the past, let's say 20, 30 years, really right now it's not as bad as it has been like in the 80s, right?
Oh, absolutely. Yeah, you're exactly right. I mean, rates in general over the last, 20, 30 years or all the way back to the 80s, this is pretty much the average rate. We're very close to what it is. So you think back to the old Jimmy Carter days, and they were, in the 18s, whereas now, 6s, people are freaking out. But I mean, people from those days are like, oh, 6 is an amazing rate.
Yeah.
So, but yeah, it's really historically, it's a pretty good rate.
And I'm not saying you were there to experience this, but I want to ask, because I think I understand, but was the reason the rates were so high in the 80s to combat inflation? Was that the idea?
That's a great question.
I don't know. I'm just curious. It would be interesting to know why they got so high, and if we could learn anything from that. I don't know.
Well, I do know that savings, like in your savings account, I think the percent that they would give you for that was like close to 10. So
that'd be great.
I know. So that kind of helped offset a little bit of the higher interest rate for mortgages. Savings were such a very generous interest rate. So maybe that had something to do with it.
Getting back to the whole construction loan process, what would you suggest consumers need to think about when they are seeking construction loan financing?
Well, normally on a construction loan, you need to have a larger down payment. So that could be whether you own your land, could be just simply money that you have in your savings account or some other account that's liquid. So number one, I would just say larger down payment, anywhere from 10 to 20% is pretty standard. That would probably be the number one thing that kind of differs from just a regular buying an existing home. Obviously, the length of time for the process. Right now you're looking at 6 to 12 months,
6 months.
Yeah,
I mean,
maybe longer,
upwards to 12. But I would say, shooting for 10 months on average. And we just this last year's a lot of delays.
Yeah.
So I can't wait to see it next year. I kind of do want a little bit of normalcy. I would like a steady amount of business.
Yeah.
Not giant influxes where and we haven't had too much of that, but the whole market in general, it's got a lot of stress on it, and the construction side.
There's no predictability.
No, and they're scared. Everyone is a little scared to ramp up production, and the thing I'm kind of worried about or thinking about is during the pandemic in 2020. I remember everyone was very freaked out, and they just it was April or so. You could tell that they were shutting down factories and everything. And I think no one knew what was going to happen. So they started selling off all the inventory they had and not producing those new appliances and the new windows. And I don't think anyone came and said that, but they held their cards real close because they learned from the last one that, they didn't want to have a giant inventory. And then that just created a huge problem when you had all these factories shut down, and then we were behind, and it just grew. And now I think it could be the inverse of that. I think everyone's ramped up production. I've heard a story of a cabinet company, a large supplier that went from $3 million a month to $5 million. Well, they need to be at $5 million now. So when that decreases, now you've got a lot of people who have invested capital in their company. And so we're going to have some interesting things happen there, I think.
Have you seen on the large scale building side a pullback as far as construction starts?
No, I think it's more qualified people. We're also, for a while there, we got a lot of, it seemed like we got more low baller tire kickers that were just they thought that there's a better deal to be had out there. I think people are realizing it's going to be okay,
Gotcha.
or the sky's not falling. But nationally, I think there has been a slowdown. I'm hearing, especially in, Andy, when we had a guest on who was talking about cancellation rates, and it went from 6% in South Carolina, in the Southeast to 14%.
Wow. And
in Texas, it went from 3 or 6%, something very low, to 27%. So that's that's August last year to August this year.
Okay.
That mostly affects the production builder. I think the low end and the medium, the mid tier is hurt the most.
Yeah.
Because an interest rate affects them, and so I think the mid tier, low tier, those people are going to have a hard time. People with money, I've always heard the expression that when there's a recession or when there's a downturn, rich people say that's when everything goes on sale. Right. So it's like, we'll see, right? It would certainly prove true for my parents. They were in this industry and really grew the company a lot. I don't want to say they grew it because that's downplaying how bad it was. But in 2010, they were able to kind of sustain their business and do okay because they had a niche and targeted the lake audience and high property values. And that's the great thing about property values right now. You were talking about construction loans and down payments. If you bought a lot on the lake at a decent price, it's cheaper to build a sick custom home than to buy the same size home. Like if you're comparing a big home as built. I mean, it is just on paper, it's easy to compete with. So when people look at that, that's kind of outweighs the interest rate, I think, a little bit.
Absolutely. Yeah. You see things that are $300-400 a foot, on the lake
that are super outdated and
right.
ton of updates. Yeah.
Yeah, so that's really, I realize that's what we compete against, not really against other builders and whatnot. It's realizing that that's the price you compete against.
Yeah.
This took a really long tangent there. I don't know. But I wanted to ask you about that
Yeah.
I wanted to mention that about the lake lots.
Yeah.
And I say lake lots, but high property values.
Yeah.
And I don't see those, like land pricing land prices are not going to go down. I just don't see that happening
No.
in key areas.
Oh,
You
yeah.
know, out if you've got land in an undesirable neighborhood or something like that, yeah, that's an issue.
Well, I think it's also a great market for a builder your size, because what I've seen is that it seems like the production builders have pulled back on their production, slowed it down, have reduced the number of construction starts, and the mid-sized builder is able to really kind of gain some market share because of a little bit more control.
Yeah, they've pulled way back from. There's really no company that competes or really tries to do a high amount of production in luxury homes and higher quality homes, and not that it held a candle to it at all.
I'll ask, before we get to these last two questions, I'll ask about what we were talking about in the beginning before we start recording about, I'll just ask it. Okay. Question actually.
That's why he's asking, is this a real show?
This is a real show. This is a real show. Arby, I have a question for you as a custom home builder that I get asked from consumers and from buyers a lot, who again are kind of going back and forth between new construction and building, which is when we start talking about the construction loan process. A lot of people will ask me, well, why doesn't the builder, carry that loan? So would love to get your thoughts on that.
In an instance where I'm building a home on your lot, you own the asset of the lot. So it's inherently risky for the builder because they're building something on the owner's asset. And that's my opinion on it, at least. So I think, in worst case scenario, something happens to the owner. Well, they still have that lot. They still have the house on it. It just gets a little messy. So you really I think it's a matter of like keeping all the ownership and the risk on one side. And then if you own the lot, if I owned a lot and I was building on it, I could see where that makes sense, carrying the construction interest and whatnot too. But even then, it's a custom home. So it's going to be customized to that person. So if they buy it and they're taking it off this hot market, because if you have a new high-end home for sale at the right price, it will sell right now. So if they're going to remove that from the market, they should then carry the interest on that. So that's kind of, I'm a little open to both ways, but if someone wanted to buy a house I had at drywall, I'd want it converted to a construction loan, and because they own it, they've got it off the market, they've locked in their rate potentially, even at a higher rate, but they still have the ability to do that. And then the main thing is they've customized it.
So somebody could do that if you had started a process, like you were saying, and you had the loan, it could get switched over to the buyer, you think?
This is something I learned and I haven't talked to David about it at all, but learned this from a builder up in Maryland. And he said, and he's a much bigger volume builder, and he does more production style homes. So I was very surprised to learn that he's converting his sales to construction loans. When people buy a house, a drywall or whatnot, he's converting it, getting it off his books, and the owner, converts it to a construction loan. So that opened my eyes to a new possibility there, and talked to several lenders around here. And they were like, what? Well, let me make some calls. And then they called me back and they said, that sounds like a great idea. So I haven't done it yet, but I might try it here in Stewart Landing. It's the risk versus reward. If I'm going to carry a house through to completion, I'm probably going to make more money on it. The house is done. There's no chances for changes. And the main thing is equity's probably going to go up if it's in a good location. So there's crazy instances of a builder in Nashville I know sold a house and it sold for, I think he said he could have got 200 square foot more by the time it finished. It was between 1 to 200 square foot. It was a lot of money. So that was just equity he said he left on the table. Now, the flip side of that is the builder secured it and the risk is off their plate. So I think, if someone wants to buy it, they're really going to buy it. They're not going to pay me a small deposit and we're going to have your name on it and you could potentially walk away. I think it's one or the other.
Makes sense.
Mm-hmm.
So David, loan extraordinaire. What would you say your favorite part of your job is?
I think probably the best part is helping people, especially that don't think they can get a mortgage.
Yeah.
That would probably be the best. Or people that have maybe been turned down by another lender, or that they didn't think it was possible because of maybe their job situation.
Right.
They're self-employed. They need someone to be, really creative in how to structure it and figuring out a way to make it work. So just being a part of the excitement of that person, knowing that they are going to own a home, they've been renting, they didn't think it was possible, they've been told no. That's probably the best part.
Yeah.
Because a lot of it is being creative, asking the right questions, and then educating the client.
Yeah.
Because those things can uncover a lot of things that could be beneficial for the client that maybe some other people didn't ask.
Yeah, that totally makes sense. I think educating clients is top priority because I feel like that's one of the main things that people would ask us about real estate is like, where do I start?
Right. Oh, yes.
So.
Because a lot of the buyers now, I think the statistics show that the majority of the buyers are first-time home buyers, and the majority of those are millennials.
Right.
And so there's a lot of misinformation that's out there that people don't know, or they think they know and it's wrong.
Right.
So we have to get out the truth and talk about, what is the down payment requirement? You can get in with no money down instead of 20%, which is crazy that there's lots of people still think you have to have 20% to buy a house. Education obviously is huge.
Yeah.
With the general public and with individual clients, because they also have lots of fear. I mean, they're scared to death of the process, and they've been told or heard nightmares and about the process or what happens to people, and throughout and getting turned down at the end, and so education and communication is huge
for sure. So, flip side, what's your least favorite part of your job?
Well, that's a good question. You probably need to ask my wife that one because it involves her. There are some lenders out there that, it's like a 9 to 5 job. Once 5 o'clock hits, then, hey, I'm out. It can wait till tomorrow.
Yeah.
But I view it differently. I think I'm only here because of the client and because of the referral partner that I'm working with. And so I understand kind of their situation, what they're going through, the stresses that they're facing. And so I answer the phone, nights and weekends.
So you're like a Sarah Bennett, like,
yes,
hit me
yes.
up.
I try not to take advantage of bothering David too much in the evenings and on weekends, but I do feel confident that if I need him, that my client, can get in touch with him.
Oh yes,
It's a banking emergency for
Put
the
on your
banking
case.
I need a
superhero.
pre-approval.
Yes. So I am that dad at the T-ball game over in the corner on the phone sometimes. So it does take away a little bit from family time, but they understand, and it's all part of providing for them. So that's probably the worst part, but that's not too bad.
You talked about educating consumers and whatnot. I think that we always echo that in everybody in what we do, and setting expectations and trying to communicate that on the front end. That's been a theme of everything we talk about. So are there any common things that people don't think of? Are these first-time home buyers, for instance, or someone who hadn't done a construction loan, anything that they should maybe have in order on their side?
Yeah, it's a great question. A lot of people don't really, or they're not familiar with where their credit is. So just staying abreast of where their credit is, maybe through online scoring modules. But one thing they definitely are not aware of is that those are not accurate. So they'll look on, Credit Karma or one of the other services, and they say, oh yeah, my score is 740. Well, I just let them know, generally those are 20 to 50 points higher than the actual score. So that's not necessarily accurate, but it does at least give you an idea of what's on your credit and when things are reporting and generally where the score is. So that would be number one. And the other things would be closing cost. A lot of new buyers don't know that that's extra above and beyond down payment.
Yeah.
And so kind of let them know, hey, keep in mind you're going to be paying, $5 to $7,000 depending on the purchase price and loan type in extra closing cost. And just make sure you're prepared for that. Pre-pandemic, there was the option to maybe get the seller to pay for it.
Not anymore.
Yes, those days are gone. Although I am seeing it a little bit more often now.
Yeah.
It's coming back a little bit. So
What are you seeing for builders, Sarah? You see it a lot. If someone's selling a spec home, what are they doing?
I'm still not seeing builders really do many, if any, concessions on
So
their
they're
end.
not paying closing costs.
Not
Just
that I've
curious.
seen.
Asking for a friend.
Yeah. No, I
Might know a
am.
guy.
I am seeing some builders because we had a really hard time, and Alicia knows this as well for a while, that all across the board, a lot of people were cutting commission on agents, which was really hard for buyers agents in particular because they were running themselves to death. And I get it. I see both sides. I am starting to see those builders that were reducing those commissions starting to pay more of there's no standard commission, let's be clear, but maybe pay a little bit more commission. And I'm seeing more agent bonuses. So I'm seeing that them trying to reach back out to the agents now, but I'm not seeing any concessions from the builder to the consumer right now.
it's interesting. I always think back to other cycles and construction and how builders, a lot of times more large scale builders, production builders, they will cut the commission on the realtors and think, oh, they're not as necessary or needed right now. But then the market shifts and they're like, oh, here's the bonus.
Yeah.
The bonus
Yeah.
is back.
Yeah.
Yeah.
But and then the realtors have kind of a short-term memory, and they kind of like, oh, okay, well, we'll
Yeah.
bring him back.
Yeah. Yeah.
But it's, but
that's-
but
yeah.
it is interesting, kind of the mindset,
Yeah.
especially on the production side.
Yeah. And I didn't see as many of those more like mid-sized builders, the more, we'll say semi-custom, we'll use that term. I didn't see them cutting commission as much. It was more of the larger production. But even still, I do see those builders starting to give a little bit more of a bonus and concession to the agent.
Yeah,
So,
the custom and the mid-size, it seems like they never
Yeah.
cut the commission to the realtor. They understand the value, and it's more relationship oriented versus numbers and mass production. So it does seem like it's a different relationship.
So we talked a lot about construction loans and someone maybe wanting to build, but there's the whole consumers of I own a home, but maybe I want to remodel it or add a pool. What type of loans are available for that type of client?
Well, that kind of depends on the market.
Yeah.
So if rates were a little bit lower, there would be a cash out option, like a cash out refinance.
Okay.
If rates were similar, that's an easy way to tap into the equity that we've gained over the last few years.
Yeah.
But with rates going up as much as they have over the last couple of years, I wouldn't recommend people kind of removing the lower rate that they had from a few years ago. So, in those scenarios, I typically recommend they get like a HELOC or a line of credit
Right.
and use
Yeah.
that. And then once rates come back down, then you can refinance the two together. So not a lot of renovation type loans, at least that we're doing right now.
Yeah. No, I think a HELOC would work great for somebody.
Oh, yeah, and
'Cause,
they're very flexible.
You're going to get what you need from that.
Yeah.
A lot of the renovation loans we used to remodel, and they were, they were kind of limited too. I
Yeah.
would say like they were very, the products they pushed out were not very high value.
No, and they were pricey, and the rates were significantly higher. So whether it's like I think Fannie and Freddie had a renovation loan, and
Yeah.
FHA had a 203K.
Yep.
So
And the 203K was very low.
Yeah.
And it was like, how is that a selling point? Like I can give you a little bit of cash, but it costs this much to do what you want to do.
Right.
yeah, definitely not very advantageous to the client. I didn't think.
Yeah.
I think HELOCs are a better option because they are flexible in term. You can do. I think there's still some interest-only options out there, and the term can go anywhere from 10 to 20 or more years.
This last year, we've seen a lot of price increases in construction. And a lot of builders, I'd say since 2020 is when it started, it really hit pretty hard. January 1, 2021, it was like lumber was way high. So have y'all been able to have, on the construction side, have you seen builders or lenders do anything creative to kind of help pad for that contingency and the possibility of cost increases?
I think there's normally a built-in contingency for the overall project price, but it's not something that's unusual to help offset it. I think it's just a standard contingency that's added in to help with increases and delays and things like that.
And do owners do that on their side, kind of on their own, to say like, hey, I'd like to have a cushion here. It's not in the contract, it's in the loan.
Normally it's from the builder side.
Builder side?
Or
So
lender
there's
side, I should say.
Lenders. So, but it would be like written into the contract of the building of the house?
Yes. We haven't done a ton of those, so I'm not really familiar with that, but I think it's typically from the lender side. Yeah, it was insane. I remember reading about the cost of lumber going up like 4 times.
It was really, really bad. It's stabilized now. So I think everything else has kind of come up, but I feel like housing prices or the cost have definitely stabilized.
Right.
I feel like they're not down. Like we're definitely not down, but they've stabilized where I can almost get back to a world where I could confidently tell people a range and a square foot range for a basement home versus a 1-story home versus a 2-story, where in the past 2 years, I haven't been confident at all to say, oh, that's going to be about this price. It just takes me much longer to get to a range I can even give them because it's such a variable.
Yeah. So what did you do in that market when you had a fixed cost contract and prices quadrupled throughout construction? Do you just have slimmer margins? You eat it?
Thank goodness, no, I did not. And we ran one as an escalation clause, and I did that in November 2020. I was like, something's going to be up with this lumber here. Like my builder friends were like, they were all like, well, it'll probably come back down. So if you increase the price, then it'll all balance out and you'll make money. I was like, I don't know. So I did an escalation clause, and basically it said, here's what it's priced at. And if it goes up, you pay this. And it worked okay. We recouped all the money. We were okay, but it still was a little bit of a fight. So we had a house and we had a contract, and it was escalation clause, but it doesn't show the price. It says the current market conditions are this, and we like listed out the price of 2x4s and OSB, and you list like 10 items, which is a weird way to do it. And then you say, I had to go to him and say, well, it has gone up, and here's the difference. We don't want any change order margin, nothing, but we just want to be paid the difference, and collected it. It was okay. We collected it, moved on, everyone was happy. And then we went, from that moment, I decided to do it as an allowance. So it said, here's the lumber allocated item. We're going to, we price the house at this. If it's more, we're going to do a change order. And we did that for about, 10 or so houses. And if not, we would probably lost about $400,000.
Wow.
It could have been very detrimental. I mean,
Yeah.
I think we would have found a way to overcome, but that on top of all the other cost increases, the labor
Right.
shortages, and the delays. Whew.
My
Scary thought.
my general thought over the past like 2 years of anybody building a house is you have to be flexible with your timeline, with your wants in the house. Maybe you have to adjust a few things with your budget, additional like change orders and fun. You got to be flexible to build right now. And you get an amazing product at the end. And I think it's worth it for most people, but you just got to have that mindset.
Yeah, it was an average of 30 to 48,000. So not. I mean, it's a lot of money, but someone building a custom home, everything else fell within pretty reasonable costs, and I think overall they were okay. But they were educated, and we said, hey, do you want to continue? This is how this works, and everyone left feeling okay about it. I lost a lot of sleep because it was a burden, even though it wasn't on me. It was on me to communicate and follow Cardinal Crest Construction on Instagram, and they do all these funny reels. And one of them was like, was the guy pulled up in a truck, and it was like going to meet a homeowner for another price increase talk. And he was in his car just screaming, and then he got out and he was like, he was all happy. And it described what I did for like a year. And it was terrible.
Yeah.
It was rough.
I mean, it's similar to rates.
Yeah. Oh, yeah.
You think you're getting 4, and then it ends up being 5, 5.5.
Yeah.
It's, especially over an extended period of time. If you're talking about 6, 8, 12 months, there can be huge differences without a long-term rate lock, that is.
Right.
So.
Someone's got to bring the reality. It's y'all.
Well, and the thing the fear, you talk about fear in building a custom home. I've heard so many times, well, you got to have 100,000 extra. You got to have 10% extra. I was like, this little lumber thing aside, let's put that aside. And it's definitely more reasonable. You should not be that far off if you're building what you are spec'd for.
Right.
Now, the specs are never perfect. Alicia and I talk about this all the time. You could have a trim spec that you didn't quite understand, or maybe your appliance package was a little off. But we're trying to get to a level where there's no giant holes in it.
Right.
And I think the average reputation of a custom builder is to just, here's a low ball estimate. We're going to charge you cost plus, or we're going to have very low allowances. And then, well, it's on you, And we're trying to overcome that.
Yeah. That's
Well, a lot of times fear is based on the unknown. And so if you're communicating properly and you're telling them the variables and explaining the process, then most of the times that's going to alleviate a lot of the fear. And that's what so many builders or lenders or even realtors don't do. And the best ones are great communicators and can understand, hey, this person has lots of fear. Let's dig into this and find out why, and maybe we can work our way through it.
So David, how can people find you if they were wanting to work with a lender? Reach out to you. What's the best way? Instagram? You got a website? You want to throw your phone number out?
How can people find their local loan
The
hearing?
digits. No, the best way is always my phone number.
Okay.
So that's always there. I can throw it out there now if you want it. That's actually the only number that I give out is my cell phone number. So people and partners and clients can call or text me anytime. But
God bless you.
I'm also on Instagram, Facebook, and I have a website, so we'll give you all those links as well.
Cool.
Well, thank you for joining us. This was fantastic.
Yeah, I learned a lot.
Yeah.
Well, I appreciate it. It was a lot of fun, and
Yeah.
it was a great opportunity to join y'all, the tops in the industry.
That's it.
Awesome.
If you're enjoying Design, Build, Sell, we would really appreciate if y'all could go and give us a rating and a review on Apple Podcasts. We're going to start to read some of those reviews and share what people have written. It's been very kind. We have a handful of ratings now, and we really appreciate it. If you want to follow us on Instagram, check us out on Design, Build, Sell Podcast. Check us out on the web at designbuildsellpod.com. There you can see our links to our Apple Podcast, our YouTube, and all of our pages. And stay tuned for more exciting episodes.